All right. Hey, everyone. So you might have just seen my shorts, but now I'm going to do a little bit more of a detailed analysis. And let's start off. Ooh, what the hell was that? Ooh, the book just flew off my shelf. It's probably gravity. I don't think it's the ghost that we usually have here. And, ever since I had a ghost here, I tell people about it. A lot of people are like, wow, we've had ghosts too. We just were afraid to tell people. All right. Anyway, you got to send me an email for that. Mark at stockmarketjobber.com, or just hit me up on YouTube here. All right, so S&P, right? Here's my main thoughts. We're testing resistance around the 564 level. We got this higher low. In other words, the peak formed at sorry. Gosh, I always get this stuff confused. I'm sorry. Let me make sure I got this clear. The bottom formed at a higher level than the prior bottom. In other words, the bottom in early August was at a lower level than the bottom in early September. And this is what kind of forms what we call a ascending triangle pattern. And generally speaking, right, it's a bullish thing. It tells us that as time is going by, the sellers are hanging out. They're just kind of chilling around 564. But the buyers are getting more aggressive. They're willing to pay higher prices. So just think about it. Patient and complacent sellers and aggressive buyers. It sets the stage for them to move higher. Now, this stuff is not perfect because if it was, everyone would do it, right? So I don't know what's going to happen with this rate cuts tomorrow. It almost seems like much ado about nothing. It's like, all right, everyone knows it's going to be 25 basis points. There's a lot of money on the sidelines. The S&P is looking pretty bullish. It's probably a good chance the market goes up. Now, what I would like to show you is what's going on in the tech sector, because even though the S&P looks bullish, some of these tech stocks look kind of weak. Well, guess what? There's other parts of the market than the technology sector. All right. Everyone focuses on Nvidia and Microsoft, but you got all these other sectors. There's 11 sectors. So here's the technology sector. Looks like it was going to kind of break out, but this could be setting the stage for a move higher too here. A lot of times when things go up, right, they don't go up in a like a straight line. They go up in like a staircase. And when that happens, the level that had been resistance turns into support. And that's a reflection of, actually, no, I said that backwards. I'm sorry. The level that was support turns into resistance. And that's a reflection of buyer's remorse. And it manifests itself on the chart. So when markets are going up, of course, people experience buyer's remorse. So anyway, the action here in the tech sector has looked pretty good. I mean, it's kind of all going to come down to this, I think. What happens with Apple? Like, if there was one thing to watch to see what's going to go on in the broader markets, it's right here. It's Apple. If Apple can rally and get back above this 217, 218 level, the market's going higher. If it can't, over the next couple of days, the market's going lower, right? Sometimes some price levels are more important than others. We could see 218, it was resistance, and then it became support, and then it became support. Some of these other price levels aren't that important. Like, let's just look at 221, for example. This stock doesn't seem to care about it. It just blows right through it. Like nothing is there when it moves through it or it gets to it. If we look at the 224 level, well, things are different. It was support, then it became resistance, then it became support again, then it became resistance. Now we have the 218 level. We're just going to call it 218. We'll call it 217.50. Was resistance, became support, became support. So for whatever reason that I don't know, but Apple seems to like this 224 level, and it seems to like this 218 level or 217.50, like I said, from this time horizon. So the levels in between there really aren't that important. I mean, look, you can see the stock just blew right through them. It's like they weren't even there. Blew right through it. Then we start to come down, and it's like 224. Just dropped right back through those unimportant price levels again. Found some support around 217.50. Reverse, blew right through those levels like they were not even there, right? Same thing. We sell off, we get back. It's like they're not even there. So, anyway, if there's one thing to watch, I think it's this, right? The what happens with Apple? Sometimes the markets are really complicated. You don't really know what to watch, and a lot of times that's when you should be on the sidelines and not trade. But sometimes the markets are kind of simple, and one or two things can kind of key you off. Or I mean, I don't even know if key is key you off is a word. I mean, to key in on or to focus in on or whatever, that can kind of give you some guidance in the broader market. And I think right now is one of those times with Apple. All right, thanks everyone. Please make sure you check in tomorrow. Should be kind of an interesting day. It'll probably be quiet until the Fed meeting is like at 3 or 3:30 or whatever. But it's probably going to be much ado about nothing. And I think Apple could be setting the stage here. I know this might seem confusing, but here we have the opposite of the S&P 500, right? Where we have the higher lows, here we have the lower highs. So this high formed here, this high was lower, right? That high was lower. Remember, there's a lot of other things in the S&P 500, but I think Apple's going to be like the one thing to watch. Okay, everybody, thank you so much, and well, yeah, we'll see you all tomorrow. There should be some opportunities to make some real money over the next couple of days.